Hi guys, I hope you all are healthy and safe. So today I'm back with another video on our multibagger stock series. So the next stock in our multibagger stock series is Genus Power Infrastructure Ltd. So Genus Power Infrastructure Ltd is a Kailash group company and is one of the biggest procurement and construction company, and it is founded in 1992. So now let's talk about company's core products. So Genus Power Infrastructure has two business divisions offering highly innovative sustainable solutions to power sector, that is electricity sectors. The first division is metering solution division, which provide complete range of electricity meters such as multifunctional single phase, three phase meters, CT operated meters, ABT meters, grid meters, DT meters, prepayment meters, smart meters, net meters, AMIs, MACDs, etc. And the second phase is engineering construction phase, which undertakes turnkey power projects such as substation erection up to 420 kilowatts, laying up of transmission and distribution lines, rural electrification, switchyards, network refurbishment, etc. Okay, now let's talk about company's future plan. So Genus Power Infrastructure Limited is planning to produce more and more smart meters, and the company is highly benefited from the Ujjwal Yojana mission, under which government is planning to provide electricity to all the rural areas of India. So for providing electricity, government also need meters. So Genus Power is one of the largest manufacturers of smart meters in the country right now. And other various government schemes and programs such as Ujjwal Discom Assurance Yojana, Uday Integrated Power Development Scheme, Smart Meter National Program Scheme, and Smart Grid Pilots project, in which prepayment meter is the key factor for empowering the Digital India movement. Under SMNP, 250 million conventional electricity meters are going to be replaced with smart meters, which is a very good number. So development has already started, and if we talk about the global market scenario, the global market size of smart meters is expected to grow very fast in upcoming years. The growth is attributed to government mandate and support policies for smart meter installation across end use sectors such as residential, commercial, and industrial in regions such as North America, Europe, Asia, Pacific regions. Genius is instantly enhancing its market foothold in overseas market, and it has a special focus on untapped overseas market where government are rolling out several smart prepaid meter scheme, adopting AMIs, facilitating smart grid development, increasing upgradation of transmission and distribution infrastructure, and focusing energy consumption and integration of renewable energy. The Genius Power is aggressively participating in bidding program of government projects in overseas markets such as Asia Pacific, Middle East, African regions on the strength of its high classy yet economically priced product and solutions. And I believe in upcoming years the export would be the significant contributor to the growth of the Genius Power. Okay, now let's talk about the financial analysis of Genius Power. So the first step in financial analysis is analyzing the profit and loss statement. So the first item in P&L is net sales, that is top line. So in December 19, the top line was 268.03 crores, and in March 20 it increases to 248.29 crores, and in June 20 it decreases to 84.02 crores. So it decreases due to COVID-19, and in September 20 it increases to 165.12 crores, and again in December 20 it increases to 168.03 crores. So the top line of the company is continuously increasing, which is a pretty good sign for the company. And the next item is operating profit, or the profit from the core business. So in December 19, operating profit was 40.12 crores, and in September 20 it increases to 34.35 crores, and in December 20 it decreases to 29.11 crore. So the operating profit of the company decreased in December 20 because of increase in the total expenditure in December 20. The operating profit is increasing but not at the same rate as the net sales of the company is increasing. This is because of the increasing total expenditure of the company. And the next item is profit after tax. So the profit after tax in December 19 was 17.16 crores, and in March 20 it was 13.8 crores. Okay, and in June 20 it decreases to 11.15 crores. In September 20, it decreases to 1.06 crores, and again in December 20, it increases to 29.84 crores. So the profit after tax of the Genus Power is also increasing, but not at the same rate at which the sales of the company is increasing. So what most of the companies do, they, for increasing their top line, that is net sales, they started selling on credit, and so there are high probability that their money will stuck in the market and they will not receive the total payment from the market. So you should always check the relationship between the top line and bottom line. If the top line, that is the sales of the company, is increasing, then the net profit should also increase at the same rate. Otherwise it is a bad sign for the company. So the next item is balance sheet. So the first attraction for me in the balance sheet is total reserve and surplus. So total reserve and surplus is the profit which is left after distributing all the expenses or after paying all the expenses. So in case of Genus Power, the total reserve in March 16 was 591.22 crores. In March 17, it increases to 646.57 crores, and in March 18, it increases to 723.56 crores, and again in March 20, it increases to 814.88 crores. So the reserve and surplus of the company is continuously increasing, which is a very good sign for the company. And the second item is borrowings. So borrowings of the company are the loan and advances taken by the company. So in March 16, the borrowing of the company was 1.26 crores, and in March 17, it decreases to 1.05 crores, and again in March 18, it increases to 16.26 crores, and again in March 19, it increases to 25.06 crores, and again in March 20, it decreases to 23.29 crores. So the borrowing of the company is decreasing, which is a good sign for the company. And the next item is current liabilities. So current liabilities includes amount payable to creditors and all other expenses which are payable within a year. So in March 16, the current liabilities was 383.85 crores, and in March 17, it decreases to 356.67 crores, and in March 18, it increases to 533.55 crores, and in March 20, it decreases to 480.01 crore. So the current liability of the company is continuously decreasing, which is a good sign for the company. Okay, so the next item in the balance sheet is the assets column. So the first item in the asset column is net block, that is your fixed assets. So in case of Genus Power, its net block in March 16 was 138.32 crores, and in March 17, it increases to 163.53 crores. And in March 19, it increases to 178.01 crores, and in March 20, it decreases to 173.3 crores. So the fixed asset of the company is increasing, but not at a good rate. So the next item is investment. So investment of the Genus Power in March 16 was 41.15 crores, and in March 17, it was 45 crores, and in March 19, it was 82.73 crores, and in March 20, it increases to 89.69 crores. The next item is current assets. So the current assets of the Genus Power in March 16 was 679.39 crores, and in March 17 it was 698.46 crores, and in March 18 it was 978.85 crores, and in March 20 it increases to 1042.30 crores. So the current asset of the Genus Power is continuously increasing, which is very good thing for this company. Okay guys, now let's talk about the cash flow from operating activities of Genus Power. So if you see here the cash flow from operating activity, that is the cash flow from the core business of the company, or the cash flow from the net sales of the company. So it was in March 16 it was 88.62 crores, and in March 17 it increases to 156.91 crores. Okay, and in March 18 it decreases to 6.4 crores, and it decreases because the net sales of the company also decreased in March, and again in March 19 it increases to 50.5 crores, and again in March 20 it increases to 133.6 crores. So the operating cash flow or the cash flow from operating activity is increasing, but not at a good rate. And the next item is cash flow from investing activity. So if you see the cash flow from investing activity, so it is also not increasing at a good rate, even it was negative, and the cash flow from operating activity is decreasing, which is a bad sign. And if you see the net cash flow impact or the total cash flow or the final cash flow, so the net cash flow is increasing. It is a very good sign for the company, and it increased to almost 40 crores rupees. Okay, now let's talk about some key ratios. The first ratio in case of Genius Power is PE ratio. So PE ratio tells us about how much we are willing to pay for earning 1 rupees. So in case of Genius Power, the PE ratio is 18.94. The next ratio is debt equity ratio. So the debt equity ratio tells us about the financial stability of the company. So and the ideal debt equity ratio should be less than 1. So in case of Genius Power, it is 0.31. Okay, and the next ratio is interest coverage ratio. So interest coverage ratio in the case of Genius Power is 4.57. So the ideal interest coverage ratio should be more than 5%, 5 or more than 5%. Interest coverage ratio tells us about the operational efficiency of the company. And then the next ratio is price to book ratio. So the price to book ratio tells us about the valuation of the company. And the next ratio is ROE. So ROE, that is return on equity, it tells us about how much money we are making on our investment or the money invested in a share. So ROE in case of Genius Power is 9.06%, which is a very good number. So if you compare the ROE of Genius Power with the bank's FD or the interest which banks give on the fixed deposits, so it is very good number. The bank majorly gives 6 to 7% of interest on their total deposits. So the next ratio is current ratio. So current ratio is calculated by dividing total current liabilities by total current assets. It also represents the financial stability of the company. Next ratio is debt equity ratio, and debt equity ratio also tells us about the financial stability of the company. The ideal debt equity ratio should be less than 1. So in case of Genius Power, the debt equity ratio is 0.31, which is a very good number. So interest coverage ratio in case of Genius Power is 4.57%. The ideal interest coverage ratio should be more than 5%. So in case of Genius Power, it is relatively lower. So now let's talk about peer comparison. So if you see the chart here, you can see that the Genius Power, as compared to its competitors, it is relatively cheaper. So how can you check this? You can check this by seeing the PB ratio of all its competitors. So in case of Genius Power, its PB ratio is 1.21%, and its competitors have PB ratios of 4.1%, 21.61, etc. So as compared to them, it is relatively cheaper. And now let's talk about promoters holding. So in case of Genius Power, the promoters holding in the company is 50.47%, which is a very good number, and it represents that company's promoter have trust in the company, and that's why they are stand with the company. So which is a very good number to invest in this company. Now let's talk about the pricing. So in 2009 it was trading on 85 rupees, and after that it started decreasing. So again in 2018 it reaches to 80 rupees, and then again it started decreasing. So in 20 it decreases due to COVID, as we all know, and again now it is increasing. So it is currently trading at 38.60 rupees. So tell me about your investment strategies in the comment box. So what I will do is I'm adding this stock in my watch list, and I'm waiting for the price to take a corrective move. So I'll wait for a week. If the price increase or decrease, in both cases I'll invest in this company, because if you see its price chart, so it was in 2008 it was trading at 85 rupees, and there is a saying that history always repeats itself. So there are high probability that it will again reach to 80. That's it from my side. Thank you.